Hi, this is Mediha with Toronto Condo Investments. I'm here today with Anna of Advo Tax Law. Anna is a real estate tax law expert, and we're here to discuss all taxes associated with assignments. Anna, thanks for being here. Always a hot topic.
Thank you for having me, Mediha. It's a pleasure. It's always a pleasure to chat with you. Always a pleasure.
Thank you. So let's dig right in, Anna. We know clients and investors are really interested in assignments. The market's been very lucrative in Toronto for condo assignments, and often the discussion moves on to what are the tax implications on assignment profits or deposits, and not many people are aware of it. And I know in the budget recently there have been some changes. So can we start off with what's originally what we've been used to on the tax implications on assignments, and then we can move the discussion onto the new changes as of May of this year.
Okay, so before May 7th of 2022, this is how we would pay tax on profit you realize from your assignment. If you purchase your property with the intention of using it personally as your principal place of residence, or if you plan to invest it long-term to tenants, you had no plans to quickly resell it for a quick profit, then you would pay capital gain. You would on the sale of your on that assignment, you would have what we call capital gain, and you would pay capital gain tax, which is roughly approximately 26% for the highest earners here in Ontario. Let's say if you purchased your condo for $300,000 and then you resold it on assignment for $400,000, $100,000 being your assignment profit, you would roughly pay $25,000 in tax. That's if it was your capital purchase, meaning that you hope to use that property for a very long time, and then something unexpected happened and you had to sell it on assignment before that property was even ready. So that's one treatment. If, however, you were in the business of buying and selling, flipping condos, you had 6 condos like that in the same building, and you flipped them all right before closing or way before closing, then it looks like you're in the business of buying and selling condo. That condo is not your capital property. That condo is now your inventory. It's like you running a business of buying and selling real estate property. And then the profit you realize on assignment would be treated like business profit. And in my previous example, when I was talking about the $100,000 profit, your tax will be, if you in the highest marginal rate, can be over 50%. So depending on your other income, so if you have no other income and you only made $100,000 in that year from assignment, your tax will be roughly 30-something thousand. But if you have other income, let's say you have a salary or you have other business income, and that assignment profit goes on top of your other income, then your tax rate will be close to 50%. And for larger amounts, it can be as high as 54%. So very big difference.
Yeah.
So up to now, I'm talking about Income Tax Act. Income tax. Income tax is tax we pay on income. So that portion of the taxes did not change with the budget. It did not change from what we know. Now there's also HST component. That's what many people don't realize. So before the budget, if let's say you were buying a property for your personal use, and then something changed, and you had to move, or you got divorced, or you got sick, or you had to change a job and move to a different area of the country, then you could sell your condo on assignment and not pay any HST. The rationale behind it was that HST is only for people who are in business, for business people who flip in condos.
Right.
But if you're not in business, if you're buying that condo for yourself and then had to sell it, you're not in commercial activity, therefore HST didn't apply to you. Well, that has changed. It was the budget announcement of this year, and the proposed rules became the law on May 7th, 2022. And what's new now is that it doesn't matter whether you're a business person flipping condos all the time, or you're a personal, you're just a regular buyer purchasing a condo for your family and then selling it on assignment because something changed in your life. It doesn't matter. Every time you sell a condo on assignment, there will be you must charge your purchaser HST. So in my example, when I was buying the condo for $300,000 and selling it for $400,000, so if we agreed on $100,000 profit for me, then I would have to approach my buyer and say, oh, by the way, I forgot, I should charge you HST. So it's either I would add 13% to my $100,000 profit, meaning that can you now pay me $113,000? And my buyer will probably say, no, I'm not paying your HST. I know that $400,000, that's the market price for that condo. I'm not paying extra. So then I will probably agree that HST is included in that $100,000 payment I'm about to receive. And that will reduce my, the profit I would receive. So I would get $100,000, then I would take 13% included in that. So that would be roughly, I don't know, $12,000. There are calculators for that. Don't rely on me, but there would 13% included in $100,000 that needs to go to the government. And what's left, so now you're left with maybe $88,000, that's now your profit, and that's subject to income tax. And income tax will be either capital gain 25% or business income over 50%. So suddenly you may be left with, in my example, less than just over $40 from what you thought was your $100,000 profit if you're in business. And even if you are an investor, right? So after paying HST, you now have to, out of $88,000 you have left, you have to give a quarter of it to the CRA. So you're left with what, 60 something. So suddenly assignment sales are not as attractive as they used to be. So that's the change, and that's the bad news. So we have the bad news in the budget proposal and the good news in the budget proposal. The good news relates to the portion of your assignment price that really represents the deposit you gave to the builder. So in my example, let's say when I purchased the condo for $300,000, I had to give $60,000 deposit to the builder. And when I'm assigning the agreement, the purchaser has to compensate me for that deposit and give me my assignment profit. So technically, the purchaser needs to give me $160,000 for me to be happy, right? $100,000 that's the profit, and $60,000 that's the refund of my deposit. Before the budget changes, HST would be calculated on both the deposit portion of the assignment price and the profit portion of the assignment price. So before the budget, I would pay HST on $160,000 assignment price, even though $60,000 was, my original after-tax deposit that I gave to the builder. And there was a lot of controversy about it. It was the CRA's official position that that's how they would apply it. even though there was some case law where the court said, this is just wrong. You should only apply the HST on the profit portion, not on the deposit portion. But luckily, we now have certainty, so there is no more debate as to whether the CRA gets to apply HST on the deposit portion. So we only pay HST on the profit portion on the deposit, but we always now pay HST when we do assignments. And I've been talking to my colleagues who work at CRA. They are beyond happy about the change. They're celebrating with cakes and champagne and all that, because their audits suddenly now are so much easier. If before they had to contact the taxpayer, figure out whether it was a personal purchase, business purchase, what was it? How would we determine it? And the person would always say, oh no, I bought it for myself. And then you had to prove it that the person was not maybe honest. So these audits were very common and very, time consuming.
Yeah.
Now, did you assign your condo? Yes, I did. Did you pay HST? No, I didn't. Well, you have a problem. That's it. That's as simple as the audit becomes. And I must say the CRA has become a lot more creative in the way they identify people who don't comply with their tax obligations. So I would not recommend for people to cross their fingers and hope that the CRA will never know that they had that assignment, and nobody hoping that it never comes to mind, because it's not on land titles registry. You don't go through all those steps that you normally do when you transfer a title to a property to someone else. Let me assure you that the CRA has been very busy contacting the builders.
Hang on, Anna. That's a really good point. I'm going to start that off as a separate question. Mm-hmm. So I'm going to ask you, how are assignments tracked? And can you repeat that again, that it's not on land title, but the CRA is coming? Okay.
Yep. No worries.
Okay. And on assignments, how are assignments tracked by the CRA? Because the assignment session essentially is an assignment of a contract, right? Between you and I, the assigner and the assignee. I, as the original buyer, have not actually closed on it, so it's not registered anywhere officially. How does the CRA track assignment sales?
That's a very good question, and a very common misconception, because some taxpayers think that if it's not registered in a land titles office, the CRA will never find out about it. It's a really bad idea to misrepresent or hide your assignment sales from the CRA. In general, lying to the CRA is a horrible idea, but here it's very unwise, because the CRA has been very good at identifying people who bought and sold properties on assignment. The way they do it is very simple. They contact the builders. They issue something called request for information to the builder. It's an official document that says, you have to provide us a list of your buyers, sellers, your assigners, assignees. And if you don't do that, all kind of bad things will start happening to you, meaning, lawyers, courts, federal court, all kinds of problems. So obviously, the builders do not want to deal with those problems. It's much easier for them to just provide that information to the CRA, and there the CRA will have it, your name as the assignor of that property, and if you did not report it, you're in trouble, big trouble.
So the builder would provide the list of the original buyers who bought from the sales center at the pre-construction phase. And then they'll also provide the list of the new buyers, the assignees who've bought on the condo on assignment closer to occupancy. So the CRA would have, let's say, unit 3706. They would know who the original buyer was and who the new buyer is, right? And they can cross-reference that and assume that's an assignment, right?
Absolutely right. They will have that information. Hiding it is very unwise.
Okay, and that's when they'll come. Now, in that situation, Anna, let's say the assignor, the original buyer, did not declare it, and the CRA comes back and they find it by cross-reference of documents. What are they responsible for at this stage? This is now a couple of years after the new buyer's already closed on it. What can the CRA come after for the original buyer or seller of assignment?
So what would happen is the the original buyer or the assignor would receive a brown envelope from Canada Revenue Agency that will say, hello, my name is so-and-so, I'm your auditor. We have information that you disposed of your rights under purchase and sale agreement for the property located at this address. We see that you have not declared the property. We see that you have not remitted HST for that supply. Please give us your explanation, and you will have a period of time where you would have the opportunity to talk to a lawyer, your accountant, and try to explain yourself. If you don't have anything in your defense, the CRA will issue something called a notice of reassessment, where they would impose, if you don't already have a business and HST number, they will create a business HST number for you. So you will get an HST reassessment for the amount of the HST you had to collect and remit to the government. There will also be interest charges, which are now, I believe, 5% or 6%. I haven't checked. They're not small interest charges. And also, if they're very aggressive, they will also reassess your income tax return for the year and add whatever they think you made in profit and charge either business income tax or capital gain tax, whatever they think is appropriate. And if they think that you knew or should have known that what you were doing is wrong, if you were negligent, or we call it willfully blind, meaning that you knew that you had to pay tax, but you chose not to investigate it, not to obtain professional advice. You chose to just cross your fingers, hope for the best kind of thing. Then there are something we call gross negligence penalties. And those penalties can be 50% of the tax you allegedly tried to evade. So, and given that these audits generally happen a few years after that disposition, so you have your HST, you have your income tax, you have your interest for several years, and you also may have penalties if the CRA think you deserve it, if they think you deserve it. So not a good situation, and with the latest rules, these reassessments will be hard to fight, because the test is very clear. It's no longer, oh, did you buy it for yourself? Did you buy it for business? What was it? How was it? No, HST applies to all assignments. That's as simple as it is. If you had an assignment, you had to collect and remit HST. That's it. End of story.
That's great.
I don't know if that's great or not, but great for the CRA auditors. Like I said, they are celebrating.
Yeah, easier.
For people who are in the assignment market.
Yeah. Okay. Next question. And if I'm assigning, and for whatever reason, I'm not making a profit on this, the market has shifted, or I just really need to get out of this deal. So if I assign for no profit and I only ask for my deposit back, what am I charged tax? Are there tax implications on this deal for me?
Very good question. So before the budget, let's say you're in the business, right? You're flipping 10 condos a year, and one condo is just not doing well, and you realize you have to get rid of it on assignment, and you only ask for your deposit back. Before the budget, there would be HST on the deposit portion of your purchase. So in my previous example, that $60,000 deposit, the CRA would want HST on that $60,000. With the new rules, luckily, because we calculate consideration for HST purposes as your assignment profit, as long as you don't have that assignment profit, meaning that, and by that I mean without the deposit portion. If you don't have that assignment profit, you only get your $60,000 back. There is no HST. And also, because you're not making any money, you're not making any income, there is no income tax. In fact, depending on your expenses, you may have hired, yourself
A realtor, yeah.
to help you sell the condo, or you hired a real estate lawyer. You may have a business loss there if you're in business of buying and selling condos on assignment. So no income, no tax.
Okay, great. So if we move on to the next on the principal residence piece. Mm-hmm. Okay, so and on the principal residences, so we know that the principal residence, a sale of the profit or the sale of the principal residence is exempt from taxes. There have been some new changes on this. Can you walk us through the changes and any complexities that are attached to these new changes?
Okay, so the new change to remember is the 12 months rule, and it can be confusing, and I'm going to try to explain the confusion. The rule says that if you sold a property after holding it for less than 12 months, that's your business. The sale will trigger business income, and you will pay tax on business income. That applies even if you wanted to live in the property, you actually lived in the property, you wanted to rent the property long term, you actually tried to rent the property long term and something happened. So it applies to most sales of, the rule is simple. If you sold it within less than 12 months, it's business income tax. But there are some important exceptions. The exceptions relate to what we call a list of so-called life events that sometimes force people to sell their properties when they really did not plan to do so. So the example of an event like that would be a divorce. Imagine a young couple moving into the new property, and then things didn't work out. They have to divorce, sell their house within the first year. The government says, we're not going to penalize you. Your life is miserable enough without extra taxes. So no tax for situations like that. And there's now a list of those life events that includes a job relocation, a serious illness of the taxpayer or a family member, serious family changes, things like that. And so generally, these are the life events that very easy to verify. So if you really got divorced, there would be, lawyers involved, mediations, legal bills, separations, all that stuff. If you really were seriously sick, or if you relocated for your job, again, there will be a clear record of those things happening to you. Before we could, some people would say, well, I really wanted to live in the property that was supposed to be my dream home, but I did not like the color of the house the next door. Like, it really was annoying to me. Every time I drive by my house, I see that house next door, and it's wherever red, and it annoys me. I can't live next to that house. I want to sell. Or due to pandemic, I don't think that I need to live close to downtown anymore, right? Let's say if it's someone who purchased the property, a pre-construction property years before, and then kind of reevaluated their whole lifestyle during the pandemic, and now they think, I don't want to be in the city, I want to be in a farm somewhere, so I'm going to sell. So if they sell within 12 months, they're in business.
So does this mean, Anna, so two questions. First, that list of exemptions, like the divorce or illness, that's a finite list. That's like a published list by the CRA, and there's whatever X number of things, and we have to meet the criteria, must be one of those X number of things?
Exactly. It's a specific list. Okay. And if you're not within that list, you have business income and up to 54% tax.
Okay.
I say up to because your income tax depends on your other income.
Okay. And beyond the 12-month mark, is it safe to assume, so if the change is that anything that is not on that list is, if you've sold under 12 months, that's business income. Does it mean after 12 months, I can sell this for on 13th month and I will not be taxed?
No, and that's the most important point I want people to remember. What the rule says is that if you sold before the 12 months mark, guaranteed 100% you have business income, unless you fall into those inclusions. But after the 12 months mark, the old rules apply, and those rules will look at what your intention was at the time when you purchased the property. What, do you have a history of similar transactions? What is your occupation? What did you really want to do with the property? Did you live in the property? Why did you sell the property? All those things. So the rule is after 12 months, guaranteed bad. More than 12 months, maybe bad, maybe good, but it's not guaranteed that it's okay. So always talk to your accountant or your tax professional. Do not assume that if you cross that 12 months period, you clear. No, you're not. There are many things to consider there.
Okay, that's good to know, because there's often this misconception that you're good after the 12-month mark. So just hang on for 12 months and then everything else is okay.
And that misconception existed way before the new budget changes, and I'm thinking that it will be even more pronounced now. Somehow there was this urban legend that if you hold for 12 months, then you're good. No, that's not true. I've had audits where the CRA would go after people who held their properties for over 2 years, even 3 years. Generally, there would be some serious construction or renovation involved during that period, even during 4-year period. So when what the CRA looks at is they look at your story as how you bought the property, what you do, what other properties you have, how you sold the property, and they think, does it look like a business exercise? Like, does it look like a profit-making chain of events, or does it not? Or does it look like, that was your dream family home, or does it not? So eventually it all comes to that question: were you in business or did you buy a personal property for your family to live in forever, or an investment property for you to earn income from for years to come? So for over 12 months holding periods, we're back to our regular test, which is, what kind of property was it? Was it a business flip property? Was it an investment property? Was it a personal property?
All right, great. I do have one last question for you, Anna, really quickly, and that's, I just wanted to ask you, what would your expert advice be on people considering assignments?
I will say that incorporate HST in your business plan, and as long as after you consider HST, the numbers still make sense for you, go for it. And I know people made lots of money on assignments, and it's still a good market, and it's still a way to make profit, given the amount of your return on your investments. It can still be profitable, but don't forget that HST bill may make a difference.
Great advice. Okay, great. Thank you so much, Anna. This was awesome.